Hello, welcome back to Custodial Crypto. Today I'm going to talk about China's new capitalist reforms. China has complete dominance over many global sectors and arguably lead the world in tech overall. However, they have faced serious issues of late, from a property market meltdown to weakening consumer demand and rising debt. These reforms are key to how China aims to transition their economic model to become more balanced and increase their importance in the global economy. So the first policy I'd like to start with is ending the price wars. Many Chinese companies cut prices to gain market share, often at the expense of profitability. Notably in the e-commerce and electric vehicle sectors, this makes profit margins extra thin, putting pressure on businesses, and this especially hurts small businesses and has been seen as increasingly unsustainable by the Chinese government. So in response to this, they've made automakers sign pledges to end price cutting. They've also drafted laws to ban companies from selling below their costs and ban the use of algorithms that manipulate pricing. They're also going to increase their investigation into companies' costs, and they've urged major companies to engage in what they call rational competition. The second reform is the plan to boost consumer demand. Chinese households save 35 to 45% of their disposable income, which is one of the highest saving rates in the world. China has unveiled a 30-point action plan to revive consumer spending, including raising incomes, public investment in childcare and healthcare to reduce costs, pension enhancements, tourism promotion, and even nightlife economy initiatives. They've also expanded state-backed consumer loans, and foreign luxury companies are increasingly being replaced with local ones, helped by luxury tax reductions. This leads me to the third policy that I briefly touched on, and that's pension reforms. China has one of the largest pension systems in the world, but with demographic changes and an aging population, it has come under stress. The retirement age for men will be raised from 60 to 63, and for women doing manual roles, it will go from 50 to 55, and for other women from 55 to 58, which isn't bad compared to Western nations. Many Western nations have much higher retirement ages. What is notable is that they are expanding the private sector's role in pensions. However, they are boosting tax advantages, and even foreigners will be eligible for pensions after 15 years of contributions. The fourth reform is the expansion of foreign investment access. China are reducing the number of sectors where foreign investment is restricted from 117 to 106, with sectors such as TV, pharmaceuticals, and telecommunications becoming open to foreign capital. They've also allowed foreign investors to reinvest profits back into China by creating new companies and increasing stake in existing companies without complex approvals that were previously needed. This goes hand in hand with the fifth reform, which is China's private sector promotion law passed on April 30th this year. It aims to create a level playing field between the public and private sectors, prohibiting discriminatory practices against private enterprises. It increases the development of government services for the private sector, whether they are financial services, legal, or advisory. One of the most important aspects is the protection of private enterprises, property rights, and fair market treatment. The sixth reform is free trade zones. These zones are to align with international economic trade rules, promoting systemic openness. This is also targeted at cross-border data transfer rules, with free trade zones being able to set their own rules. The Hainan port will be able to have independent custom rules, with zero tariffs, making it a global trading hub. This takes us to the final reform, which is foreign exchange reforms. If China is to expand as a global trading hub, foreign investors need to be able to trust their currency. First, they're to expand offshore issuance, allowing the yuan to circulate outside of the country. China enforces strict capital controls. They do not like funds leaving the country. They're going to help boost foreign trade and investment to help compete with America, so they'll be able to give loans denominated in the yuan. Foreign nations are converting their national debt into the yuan already and doing direct currency swaps with China, bypassing the dollar. The view is that China will stop manipulating forex rates as much as they are and stop devaluing their currency, making the yuan more traditional like the euro or the dollar. And that brings our video to an end. I think that these policies are a huge change in the global order. Let me know what you think in the comments, and please like and subscribe, and I'll see you in the next video.